Okay, welcome everybody. Hope everybody's doing super well today. And I wanted to bring on my accountant, Mo, and kind of go through a crash course of how to set up a business in Canada or in BC, that is 101. So, during lecture, during classes, a lot of people ask me very specific accounting and legal questions that I really do not feel comfortable in answering, just because I don't want to give you the wrong answer. And you know, uh, yeah. Anyway, so Mo, you can hear me, right?
Yeah, I can. Thanks, Tom, for having me on.
Of course, not a problem, not a problem. So Mo, do you want to maybe just introduce yourself real quick? What you do, how long you've been doing it for, etc.
Yeah, absolutely. So, name is Mo McCly. Own McCly Tax and accounting firm in Burnaby. Prat- Been practicing accounting for the last 15 years. Specialize in small, mid-sized corporation taxes, estate planning, family trust, whole array of corporations. Been really focused in the last 12 to 15 months on e-commerce business, especially with Tom and his students. And it's been such a growing industry, and it's been fantastic.
Yeah, no, absolutely. So Mo, I guess we can just jump right into it. So a lot of my students, they've taken my weekend course, and one of the first things that they do need to do is to start up some sort of a corporation. I've already told them that, hey, there's many different kinds of corporations you can set up in Canada, such as sole proprietorship, corporation, et cetera, et cetera. There's pros and cons to both.
Yeah.
So maybe if you want to talk to us a little bit about what the differences are between sole proprietor and incorporation. What are the pros and what are the cons?
Yeah, absolutely. So a sole proprietor is basically owned by an individual. This individual is associated with a sole proprietor. When you're actually filing a sole proprietor, you're reporting that on your personal income tax return. In Canada, a sole proprietor is due June 15th. If you do have any taxes owing, it's due April 30th. The pros and cons. The pros are it's very simple. There's not a lot of all the expenses in a corporation and sole proprietor are exactly the same. The difference is if you actually have income left as a sole proprietor, you're getting taxed at that marginal tax rate. So if you're making over $200,000 and $210,000, you're going to get taxed at the highest rate. So there's very little tax planning that an accountant can do on a sole proprietor. Whatever income you have gets taxed at that marginal rate. An incorporation is an individual entity that's by itself. And so what happens is you actually do a name search, you have a structure on who owns the shares of the corporation. That corporation then basically it's its own entity, the same expenses and revenue. But if we have $200,000 or $210,000 left in a corporation, we don't, and the shareholder doesn't need all the money, we can actually leave the money behind, use a small business deduction, and get taxed at a small business deduction rate of 12%. So there's a lot of tax savings. So generally, you're taking the 88 cents on a dollar and reinvesting and buying more inventory to put on Amazon. So there's a huge benefit of having a corporation and reinvesting the after-tax money back into inventory.
Right. So yeah, I guess as a beginner. So for sole proprietor, do you know the steps of how to get that set up?
Yeah, absolutely. So a sole proprietor, the first thing you want to do is choose a name. Once you have a name chosen, we want to do a name search. After the name search has been done and it's been approved, we basically go through BC Corporation and incorporate a sole proprietor. Once that's done, you will get a 9-digit business number for the sole proprietor. That's
Okay,
really the basic steps for that.
got it. And what about incorporation?
So incorporations are very similar. We would start off with a name search again. We always recommend to have 3 name choices for a corporation. Once a corporation is set up, it's always good to know what you want to have for share classes, what the structure is. If you have a partner, we want to make sure that each of you have the right class of shares, voting shares, and also future tax planning. It's always easier to set up a share structure in the beginning than doing it after. The share structure is the shares that you own. So it's kind of like if you went and bought Microsoft or Facebook, you're buying shares of a company. And the same thing as an incorporation. Once that's done, we do the BC register, set up the actual shares in the company, and then we're good to go.
Got it. And then in terms of the name, I know that there's a very specific way to submit the names. Can you talk to us about that?
Yeah, absolutely. So you would have different types of names. So there's limited and incorporated. Generally, a limited company or corporation is more common for businesses to use. Incorporation is generally for professionals, accounting firms. So you could have a company named Amazon Limited or Tom Wang Limited. That would be the actual name of the company. You do need to have that LTD to show it's a limited company behind it. Inc. would be McCly Tax and Accounting Inc. Any kind of professional engineering lawyers generally use the Inc. behind it.
Okay. I have your screen sharing. Please do not screen share. In a sec. There you go. Thank you. By the way, guys, we'll answer all the questions at the end. So make sure you prepare your questions and we can fire them off to Mo. So Mo, maybe in terms of bank accounts, if you get incorporated, you submit your name change, you submit your names and everything like that. For bank accounts, you take that letter of incorporation that's been approved, you go to the bank, you open up whatever bank accounts you want to open. I've been telling my students to open up Canadian checking account, US dollar checking account, as well as a credit card. For sole proprietor, you don't really need to open up any new bank accounts then, right?
Yeah, that's a great point, Tom. So as a sole proprietor, because it's the individual yourself, you don't really need to have your own corporation bank account. You're really not a corporation, you're self-incorporated. Mm-hmm. And so your personal banking or checking account will work for yourself and your personal credit card. As you mentioned, you're correct. When you have an incorporation, you always want to have a different account. You need a different account for CRA purpose, audit trail purposes, to keep everything different. Once you intermingle your funds personally in corporation, if by chance you ever get audited by CRA, it can get very messy trying to figure out what funds belong to the corporation and what are personal. And as you said, it's quite simple process. You take the certificate of incorporation to the bank. The bank will look at that, open up the account under the business name, and you're right. I would open up a checking account, a USD account, and then also get a corporation credit card.
Yeah, guys, also, like, let's say if you do go down the incorporation route, what I do is, and I should have done this at the beginning, but this is a, experience. So let's say your budget to start an Amazon business, let's just say, for example, is 5,000. I would actually just take out 5,000 from my personal account, put it in my incorporation account, and basically spend all the money in my incorporation account. So if there are any sort of business expenses, you just think of it as literally two separate people, right? And then at the end of the year, your company now owes you 5,000 because you put 5,000 into your company. You can actually take that money back once you make a profit, and that doesn't get taxed at all either.
Yeah, and that's a good point. When you actually even have a corporation, and let's say at the first, it's always hard to get a credit card on a corporation because there's no credit. You can still use your own credit card, record the expenses in the corporation, and the company can reimburse you. Or if the company doesn't have money, it goes into an account, and in the future, the company pays you back. That's all tax-free because you're basically loaning money from yourself as an individual to the corporation. Once that corporation starts generating income and revenue, it automatically will pay you back once it has funds in the bank account.
Right. It's like, for those who are working 9 to 5, imagine that your company asks you to buy something on your own personal credit card. Well, they will reimburse you after that. They'll reimburse you that amount if you show them the receipt and stuff, and that amount doesn't get taxed or anything. So it's the same thing. So in terms of maybe, Mo, if you can talk to us maybe a little bit about some best practices for bookkeeping, just to make sure, just make everything clean as possible and record all the receipts. What are some of the things that people should record, how they should record it? What are some of the things that they should keep, just to, keep everything as clean as possible? Because I at the beginning of my kind of Amazon journey, it was just a complete mess. And yeah, if I was to do it again, I definitely would not do the way I did it.
Yeah, absolutely. And one of the key things I always tell my clients, the success of a business is financial information. The more you can understand your financial information day to day and record it, the more you can grow. And that will tell you the margins, the costs, and everything. So one of the best practices of keeping bookkeeping is either you can do it through, there's fantastic softwares out there. There's Xero, there's QuickBooks Online, Simply Accounting. There's a whole bunch out there. And you can, even if you don't want to spend the monthly fees and stuff and you just want to keep it basic and plain simple, you can even formulate an Excel spreadsheet, or even just email me. I've got an Excel spreadsheet that I can just even send off. And it basically has your revenues, and it's got 26 different expense columns. And really what we're doing is we're taking any expenses that attain or pertain to the company, we record that on the Excel spreadsheet. If you are a GST registrant, the GST registrant as a sole proprietor and a corporation is the same. So how the GST really works is if you have sales that are over $30,000, you need to open up a GST account. If your sales are under the $30,000 in the 4 consecutive quarter or the year, then you don't have to open up a GST account. But as soon as you hit that $29,999, we have to open up a GST account. And it's quite simple. It's calling CRA. We do it over the phone. In about 20 minutes, a GST account is open. In that Excel spreadsheet or accounting software, we would separate the GST that you paid on purchases. So if you bought a bottle of water, it cost you $1, you paid 5 cents GST, $1.05 total. The dollar would be recorded as an expense. The 5 cents that you paid for GST, that is a credit that you're going to get back and offset against your GST. The GST is also only applicable in Canada. So if you're selling on Amazon.com into the States, there is no GST. US doesn't pay any taxes out there, so there's no GST account. Mm-hmm. If you're selling on .ca, we have to make sure that in the Amazon.ca, the sales and tax codes are all correctly set up. You'll have GST and PST in BC. For example, if you're in Ontario, it's HST. All different provinces have it. Some provinces like Saskatchewan, where they have PST, or Manitoba, you actually don't even have to open a PST account. They're actually required to self-assess themselves when they get a product from BC. So we want to make sure that all the expenses are correctly recorded. And the more detailed the Excel or accounting records are, the better it is for CRA and audit trail purposes.
Right. So every single time you guys spend money on a business expense, every single time you guys earn money from a business expense or business, just record it. That way, at the end of the year, you know exactly what each transaction was for. So is there anything else that, Mo, you want to touch base on?
Yeah, so the other part we have to look at is what happens when it comes down to filing a sole proprietor. When should you start looking at the accounting? Is there stuff that we can minimize or do something? And there are things that we could do. Usually what we would recommend is in October or November, if you're a sole proprietor, we meet for an hour, we look at your records. It's quite important to have your accounting records all up to date. And then we can see, okay, let's take a look, and do we need to have any additional expenses? Are we missing anything? Is there any tax strategy possible opportunities that we have? And same thing with the corporation. The corporation is fantastic. It's just because if we don't need the money, you need 40 or 50,000 annually to survive and live off. We have the excess cash. We can put that back, pay the taxes on it, or we can say, hey, I need to purchase a new computer, or I'm looking at leasing a space, or I need a vehicle. So there's a lot of tax opportunities that we can have to minimize it, but planning is always a good strategy, I would say.
Cool. Awesome. So guys, let's open up to some questions. I'm sure there's lots. One of the questions that I'm anticipating is that the cross-border tax, Mo. which I think is kind of still very gray at this point, would you say?
Yeah, it is. It is. So and that's a good point. So we have a couple of things that we have to really worry about. Is one is the state taxes. So each place that Amazon.com is supplying to, do we need to open a state tax in each province? So if we're based in .com out of California, we're supplying to New York or Chicago, do we need to open up a state tax?
Mm-hmm.
And the question, it's still a little bit of a gray area. Technically, yes, we should be opening up state tax, but we haven't really come to a clear understanding of how does it work and what should we do. One of the things that we have to do on the Canadian side is, because we have a treaty with Canada and US, when you're filing a corporation tax return, we file a treaty-based return on the Canadian side saying, yes, I am selling in the States, but because Canada and US has a treaty, we therefore don't have to pay any taxes. And that's quite important for a corporation to do.
And that's the W-8 INBN form or something?
Yeah, so that the W-8 BEN form is basically a US company allowing to pay a Canadian. The US tax treaty form is called a 1120-F. And so the 1120-F is filled out on the Canadian side, which us accountants would do, and then we would remit it to the Canadian side in IRS.
Okay. So we have, I think Gina put her hand up. Let's see. Hey, Gina, are you there?
Can you hear me? Can you hear me?
Yep, we can.
Okay, so I had a question. I ran into this with a friend, and they're already incorporated, right? So they're incorporated in a Canadian account.
Yeah.
But then they suggested that because the Amazon business is the U.S., so technically to open up a U.S. account, and then basically they're doing two business under one corporation. Is that okay? Because it's the U.S. side is the Amazon, and their Canadian side, they're doing the Canadian side. I just said it's just better to have two separate identities, but they said that their accountant was okay with that, which doesn't really. I don't know if it's.
Gina, sorry, you mean they created a company in the States?
So they created the corporation, correct?
In the States or in Canada?
In Canada.
Okay.
So the corporation has a Canadian identity at the bank.
Okay.
So they suggested to me, because I have a corporation too, which I'm already incorporated, but it was just a question that came up, to open up the U.S. side. You know how you can open up a U.S. account and then have two separate businesses under one umbrella.
So you're running a Canadian corporation and having a U.S. account with that Canadian corporation?
Yeah.
Yeah, you could totally do that, and which is fine. You can have investments or assets all over the world under a Canadian corporation. The only requirement Canada has is once that bank account reaches over $100,000 Canadian, you are required to file a foreign verification statement, which is called a T1135. So that's it. There's no tax basis on it, but it's just a foreign statement that they want to know that you have assets in a Canadian company outside of Canada. But absolutely, I have clients that have U.S., Europe bank accounts in a Canadian corporation.
Like under one umbrella, right? Like, for example, the corporation that we're opening up with, this Amazon business, has a Canadian side as well as a U.S. side, correct?
Sorry, I don't understand. Gina, just to clarify, what do you mean by U.S. side? Like, what is that? Like U.S. bank?
Our U.S. bank account.
Where is that U.S. bank account located?
Like TD. Let's just say TD.
Yeah.
And then you know how when we open up our bank account, we have a U.S. side as well as a Canadian side?
Well, it's U.S. dollar account is what you're saying.
Yes, so U.S. dollar account on the U.S. account side, and then there's a Canadian side.
Okay.
Right?
I think that's overcomplicating it. How I've been doing it is I go to TD, I tell them I want to open up a small business account. I tell them I want a Canadian account, I want a US dollar account, and I want a credit card. That's all the three accounts that I have at TD.
Okay.
I
no,
think you don't need to, I think that's an extra step that you do not need to do.
yeah,
I
yeah,
would,
no, I just, yeah,
yeah,
sorry,
I
go
would
ahead.
agree. I would agree with Tom. It's always nicer to keep everything in Canada and
Simple.
easier. Yeah.
Yeah, no, I know. I just had this confrontation with one of my friends, and we were kind of like bickering back and forth each other. And I knew that it'd be better with separate identities, but he was saying that his accountant does this a lot, right? So I was like, I just want to clarify that. Okay, that's good. That's just my
Okay,
question.
no problem. Okay, one second. Okay, so what if I decide to change the corp name later? Is it very difficult?
No, not at all. So a name change is quite easy to do. Again, it's the same process. We do a name search. Once that name search is approved, then we would actually fill out another application. Not myself, a legal lawyer or yourself. As an accountant, we can't do any legal documents. And then it's just a name change request and approval. It's quite easy to do. It's done within the day, the name change.
Okay. Is there anything in the incorporation application that we need to specify to indicate that we're opening an Amazon store?
No, nothing in the incorporation documents that is required, BC incorporation, that you're opening Amazon. Generally, where that comes in play is when we're actually doing the tax return. As a new requirement that Canada Revenue Agency has, we're actually required to list what is the main service or product provided by the corporation or individual. And if they are selling online, we have to actually list the websites where they're selling and what is the percentage of revenue or income that is generated from online sales.
Okay, cool. How do you determine your company's fiscal year and when is the best time?
That's a great question. So you can choose a fiscal year and if you incorporated on today, May 15th, you can choose any fiscal year end you want, month end. So you can do May 31st, June 30th, whatever you'd feel like. The most common practice these days is December 31st. Reason being is if you have investments, T5s, T4s for employees, they're all based on a calendar year. So it's quite simple and easy to match. That being said, people, if you incorporate in May, you're going to have a short year end December. Some people don't want to have it just for fees, so they choose an April 30th year end. There's really no rhyme or reason, but you can choose whatever year end. I personally like December 31st just because my T4s, T5s, and if I have investments in the future, they agree to the statements.
Cool. Do we need a GST account if our sales is in US Amazon and we're not collecting any GST from the US?
Great question. Yeah, so those are called non-taxable sales. So when you are selling to the US, no, you're not required. So the taxable sales are based on Canadian sales. So if you have $30,000 of taxable sales in Canada, then yes, you're required to. Because you are selling to the US, and not collecting GST, no. You can voluntarily open up a GST account if you want, but no, you're correct. You don't need to open a GST account.
Got it. What if the corporation owner changed? Does this affect a bank account?
Yeah, if the corporation's ownership did change, yes, that does change the bank account structure. You will need to update the new directors, provide that to the bank list of directors. You have to also update that with BC registry corporations to provide them the new director. The other thing you'll also want to look at is if there's any tax implication, if there's any kind of value to the company when you're changing the direction. If there's a value to the company, then you can't really say I paid $10 for the shares and I'm going to sell it to you for 10. The company's $500,000 of assets or goodwill on it, the company has a value to it. So the shares have to be sold at a fair market value price.
Do we need to open a payroll deduction account if we are not paying ourselves salary, just dividends?
No, No. So if you are not paying any payroll at all, you have no staff, and you as shareholders or your partners or shareholders, no, a payroll account is not required. Dividends are just filing T5s at the end of the year.
Okay. Paula, with regards to your question regarding opening and submitting Corp, we actually talked about this at the beginning of the interview, so you might have hopped on late. So I'm just going to repost the interview either today or tomorrow, and then just watch the beginning end because we don't want to go over that one more time. So already been talked about. Grace says, I already have an incorporation, but it's for providing professional IT services. Can I use the same incorporation to sell products on Amazon, or do I need to open up new incorporation?
No, well, you don't have to open up a new corporation, so you can actually co-intermingle services or products into one company and have a different stream. The only reason people do try to keep it separate is if the Amazon company in the future is worth, a couple of million or something, you can't separate it. Or if you're a consulting business, that's the only reason you want to separate it, is more for future planning. If you have a plan to sell specifically the Amazon company or your consulting business, you want to keep the two separated. If you don't have any plans and you just want to have that one company, absolutely, you can have the same revenue stream in the one company.
Cool. Awesome. So guys, I think that's all the questions we have. I really appreciate you hopping on, Mo. So what I'll do is I will no, Mo does not accept any new clients. No, I'm just kidding. Of course. he of course accepts new clients. What I'll do is I'm gonna repost this right away. I'm gonna put it on. Yeah, I'm gonna repost this right away. And then I'm gonna send you guys an email with all of Mo's contact info. His what's the best way to get a hold of you, Mo? Would it through email?
Yeah, email is probably the best way to get a hold of me, and if you can leave your contact number, and then we can usually set up a quick call or schedule and answer any questions that you have.
Okay, perfect. So I'll send Mo's email contact, and then for those who currently have a corporation or a real estate business or whatever, Mo can definitely take care of you. And I'm going to include all that. And again, when it comes to me offering these services, it's not like Mo pays me a commission on the side where I have to advertise for him. I'm literally giving you guys everything that I personally use for my own Amazon business that has worked out for me. I used a funny story. I used an accountant last year or the year before that was recommended by my friend. He's like, oh, he's so cheap. Like, go with him. I was like, okay, like I want to save some money. It turns out the guy wasn't even a CPA. He couldn't even get me the financial statements. And I'm trying to apply for some other stuff right now that requires financial statements over the past 2 years. And I don't have it because I went with someone who was cheap. The word cheap, can be good, but at the same time, you get what you pay for these days. So Mo, I appreciate you coming on. Thank you so much for assisting us. I'm going to send everybody your contact information, and people can get a hold of you if they have any more questions.
My pleasure, and thanks for having me on, Tom.
No problem. All right, guys. I hope you all have a great day, and then I'm going to send you guys an email shortly. Bye-bye.